Hey guys, I'm back with another video. So this one is kind of impromptu one. I know I was live this morning already, but I saw this segment from, hold on one second you guys, give me 1 minute. I saw this segment from, hold on, am I not live? 1 second here. This is so aggravating. Okay. Okay, 1 minute. Why is this? I'm trying to put the chat up here. Okay, give me 1 second. So it might be a short video, but I don't know if I want to react to this video. 1 second. In its entirety. I think it's important to kind of point out a little bit here, and of course I have my own angle. Really depends on who's here. To see if I'm trying to put the chat up right now. No, can't. 1 second, you guys. I will be back. Okay. So that is that. Okay, and then if I do this, it should pop up. Nope. Right here. Good. Save. Okay. So the chat is up just in case somebody showed up and want to chime in. Feel free to do that anytime. But anyway, so let's react to this video. Now the title is kind of giving it away already. So we all know, if you watch Moran's Rants, right? He does this series about connect the dot based on private equity, try to implant somebody in the company to try to gain, the fee structure that they have, 2 to 20 or something. They get 2% in front and then 20% when they make money, and all that stuff. Right? And if you haven't watched that series already, of course, go ahead to watch that. But I'm sure if you subscribe to me, most of you know about that series. Now, it's confirming to me that when I watch this particular segment, and of course I have my own interpretation of why it's coming out all of a sudden. Now they're pumping it to the retail investor, right? In this one, Tony Robbins is a very well-known motivated speaker, and he wrote many books on how to beat Wall Street and all that stuff. And maybe he is trying to help people be the elite, quote unquote, right? But the timing of this whole thing is very curious to me. But if you haven't seen this one, I don't know if I want to kind of interact with or react to the whole video. I haven't decided yet, but I decided to go live because I didn't want to pre-record this. Kind of too lazy to cut it the way that I want it to be. But anyway, so let's get on with it, and you know what I mean by that. I know nobody's here yet, but again, feel free to chime in whenever you want. So let's go ahead and play this one real quick. Ooh, wait a minute. Am I on? Yes, I am on. Okay, unmute.
The values of legacy media. Tony, thanks for joining us today.
So good to see you, brother. Nice to see you.
Tony, is this book about democratizing the process of investing and making investing information that was previously clandestine accessible to ordinary investors so that we might take advantage of some of the principles that some of the wealthiest people in the world have been able to, up till now, exploit?
That's absolutely right. I've been very frustrated. I wrote a book right after the financial crisis. I hadn't written a book in 20 years, but I was so angry. And I know the people in the financial industry and saw the level of abuse. And my question was, is the game still winnable? And so I decided to interview 50 at that time of the greatest investors in history that are alive today. All people that started with nothing and became the best in the world at what they did. They're all very different. And I did this 674-page book. I wanted something that anybody could pick up and start to develop that financial security and freedom, and more advanced people could do. I wanted to hit both, and we did. I was really pleased with it. Then I wrote a second book a few years later because I know when a crash comes, people forget everything else you taught them. And I knew the one would be coming, not because I'm so, have such great vision. It's just every 5 years, roughly, we have a bear market. So I wrote Unshakable, and I thought I was done, but now it's a trilogy because so many people are behind. We're in tough economic times, obviously, and people don't have a clear plan for their future. And how are you going to get there? Well, the only way to get there is save more money and invest it or get bigger returns. Well, bigger returns usually takes bigger risks. Bigger risks can lead to you not having anything or a lot less than you need. And so I was working with Ray Dalio, one of the greatest investors in history, become a good friend over the last decade. And I asked him one day, out of all the things you've taught me, he's got so many principles. This is the man who manages $170 billion in assets for countries, for pension funds. I said, what's the single most important investment principle you could give me? And he said, Tony, I struggled with that for the last decade. And he said, I've made it into a mathematical principle that's so simple. I call it the holy grail of investing, which is the title of the book. It comes from Ray. And I said, what is it? He goes, everyone knows if you want bigger returns, you got to take bigger risks. And the only thing that can help you is diversification. Everybody knows diversification. He said, but what they fail to teach you that I figured out is if you can find 8 to 12 investments that are non-correlated. Now, for your audience, I'm sure many of them know, but in case they don't, when things are correlated, that means they tend to move in the same direction. If they move up, they both move up. If they move down, they both move down. If they're not correlated, they go in opposite directions. So stocks and bonds typically would go in opposite directions. People have their bonds, so if stocks go down, their bonds kind of save them. The only problem is in 2022 and 2008, both of them went down. And so without going through the technical analysis, he figured out this formula. Well, it sounds good, but it's hard to find these uncorrelated investments when you're just looking at stocks and bonds around the world. And there's a lot fewer stocks today and a lot more correlated around the world. And so I started looking around and trying to find the answers. And I was at a JP Morgan conference where they do it once a year. It's an alternative investment conference. You have to be a billionaire to attend. I was a speaker, so I got to go. And Ray was right before me, and he spoke. And all these billionaires were not taking notes the whole time. Somebody asked him a similar question. He said this formula, and every head in the room went and wrote it down. So I was like, okay, how do I crack this code? Well, the only way you can do it is by getting involved with alternative investments. And this is the problem. The greatest returns in the world have been kept away from the average public. In America and around the world, especially if you do business in America, people can invest in companies here. You have a limitation. You have to be a certain type of investor. You have to have $1 million net worth as a minimum, not counting your house. And you have to make $200,000 or $300,000 a year. Well, a lot of people inherited their money. They're not sophisticated, or they built a business. They don't know about investing. And so Congress now finally agreed with me because this is so unfair. And the House passed a law that says you can now take a test. You study, take a test, and then you can tap into these. Now, what does that mean? Let me just give it to you real quick. I interviewed 13 of the most successful investors in the world in this category of alternative investments, private equity.
So let me kind of summarize there a little bit, right? Of course, these are like the elite, right? Of course, you explain how being the accredited investor, you need $1 million liquid, okay, in your bank account or whatever, not including your house. This is previously. So now, you could take a test and become the accredited investor. Now, I don't know what the tests entail, but you might be able to do that. Series 6 or something like that, but there's a test for that. I need to look it up for future endeavor for my own self here. But my point is that these type of group of investors are, walled off, from retail investors for a long time, right? My curiosity is that why now? Why Tony Robbins and Russell Brand, very well known people, very popular, very influential in that sense. Why now? Why pump this to the public now? I'll give you my own opinion later on. Hi, Manuel. Thank you for joining. So he left off with the private equity aspect of things. And these are, sorry, my dog is just going crazy. Hold on, let me close the door real quick.
now take a test. You study, take a test, and then you can tap into these. Now, what does that mean? Let me just give it to you real quick. I interviewed 13 of the most successful investors in the world in this category of alternative investments, private equity, private credit, private real estate. And these are people that manage $20 to $100 billion funds. And this is what's crazy. If you're trying to get to your goals, these guys are getting 20 to 30% compounded returns every year for decades. Now, the average person think that's impossible. And the reason is for decades, that money has gone to big pension funds, to the big banking institutions, and to the ultra wealthy. And so now that it could be a way for people to legally start to invest, even if they're not in that category, the second problem you've got is getting in. And since I have a good name and brand and know a lot of people, I've been able to get little pieces of some of these funds. But what happened was I was lamenting one day to a dear friend of mine who's worked with Paul Tudor Jones, a really brilliant financial guy. And I was saying, I get these little pieces. It's like, trying to get into the right club. And, if you don't know the right people, even if you got the money, you're on the other side of the velvet rope. You're not getting in. And I said, I've got little pieces, but this is frustrating. And he said, Tony, I'm going to tell you what I do with most of my money. And this is a really brilliant guy, so I'm leaning in. And I said, well, what do you do? He goes, there's this firm in Houston, Texas. And I said, not London, not New York, not Singapore, Houston. He goes, yes, they're outside the bubble. Instead of trying to fight to get a little piece of one of these funds, he said they've spent billions of dollars and they bought into the fund, and you can buy a piece of the actual corporations. Now, I'll shut up after this because I've done a long rant on this, but here's what I want you to understand. If you look at the Forbes 400, the richest people in the world, and I asked you, Russell, what industry do you think is the most billionaires? What would you say?
Probably tech.
That's what I thought too. It's not tech. What would be your second guess?
Energy.
Energy would be a great guess. It's not. Third, I'd say is real. But it's actually financial services, and it's not hedge funds because they go up and down. It's private equity. And the reason, Russell, is
Private equity. And this is important to pay attention to because this is how, Marantz has been right the whole time. And this is the inner working of this private equity.
I'd say is real. But it's actually financial services, and it's not hedge funds because they go up and down. It's private equity. And the reason, Russell, is they tie your money up for 5 years, some of them 10 years, and people agree to it. And they get 2% on your money, whether they make you money or not, and 20% of your upside. And the only reason people do
2% fee no matter what, and 20% upside. So, mic drop, right? Of course, Marantz is right this whole time. And now they are trying to democratize it to the public. Now, I might just stop there, but, you might know the angle of what I'm about to say. And, of course, it's going to be related to Gamestop, right? So, what has been happening? Perhaps, of course, later on in this interview, I'll link the whole video so that you could really understand what's going on there. What's been happening in GameStop so far, right? We all know that, these private equity, I'm sure they've been shorting GameStop for decades on end, right? So now they're probably getting ready to set up a back holder for the 401k investor or even retail investor that is so excited about this type of segment that they could make money, on top of, the private equity angle of things, democratizing it to the public. And this is the angle that I think that they're gonna try to blame that, when GameStop's doing well, right? Because again, people are unexpectedly thinking that, Tony Robbins has been right. It's true that they are able to kind of generate those returns for decades on end. It's just that right now, they are shorting GameStop to oblivion, and they can't get out of it. And so the only way that they could get out of it is to, bring people in to try to get in as much, capital as possible in order to try to cover, right? But I don't know if it's going to be successful or not. And so hopefully, people watching Marantz and all that stuff, and I'm trying to spread the word. I'm sure I'm going to try to comment on this video down below to try to get Russell Brand to interview, or at least have Marantz friends on Russell Brand to kind of spread information. But I don't know if he's going to be doing that. I don't know if Russell Brand is aware of that angle of things. And so my concern is that they're going to try to blame the crash of these type of fund 401k people, or to try to offload their risk to the 401k holder in the world out there, right? And people who are, again, enthusiastic about this type of return that Tony is talking about here. And since these people are so influential, I'm sure most people are going to want to kind of get a hands on those type of instruments, right? And so, yeah, that's just my angle there. I don't know if it's gonna come out of anything, but hey, it is what it is. But it's kind of curious to me that this type of segment come along, and you know, let me play a little bit more.
Do that, of course, is because they're getting returns that are ridiculous. Like, here's an example. If most people in their 401k in the U.S. or in other countries, they'll invest, let's say, in the S&P 500, the famous index. It's the top 500 companies in the New York Stock Exchange. For the last 35 years, that's brought a return of 9.2%. Well, why does that matter? It means you double your money every 8 years doing nothing, which is pretty cool. But if you put your money not with these people, not the people that I interviewed for this book, who are the 20 and 30 percenters, average private equity has been 14.2%. I'm throwing a lot of numbers, but that means you're making 50% more per year compounded. So if you put $100,000 out of like your 401k or whatever years ago in the S&P 500 and forgot about it, it's worth $2.6 million today. It's pretty amazing. But if you took the same $100,000 and put it in private equity, it's worth $13.9 million. So that's what's now available for people. And instead of paying these big fees of 2 and 20, you can actually be a partner in all of the things they own and get the 2 and 20 yourself. And that's why I'm so passionate about this. And then also we're giving all the rights to this book, all the profits of this book is feeding America. I think I provided over 1 billion meals over the last 8 years through them, through both all my books I've done this with and also obviously additional contributions. So when people are learning to change their own life, they can help other people that are in need as well.
Well, it's kind of curious to me, like how many years it's been, like 20% for 50 years. It has to have some sort of fixed there. You can't beat the market, but for some reason this private equity gets to beat the market 100% at the time almost, right? And later on in this segment, obviously he's talking about how those private equity loan to this, we all know what happened in AMC. Come on, they take this loan, the commercial banks didn't want to loan, and so private equity comes in, they give you a large sum of money. It's like, hey, AMC, you can't loan from whatever. Take a loan from JP Morgan because they, tight the loan lending standard, tighten it. And with the business that AMC was able to kind of present, the bank's like, oh, I'm not touching that. And so private equity jump in and say, hey, if you borrow my money, you have to put these people into your board of director and all that stuff. And so this is how they're molding those companies in order to, give them that sure return of decades on end, and that's how they fix the game to benefit their own pocket, right? And this particular interview, I think, kind of confirmed what happened there. Winthrop, let's see. It's silly to think that short didn't close already. I don't know. If you don't think that they closed, all right. Where's the price action? So I don't know. I just have different opinion than you. I'm buying ticker. What's AP? APL? What the hell? Solid long-term investment. What's APO? Give me why are you buying it? Are you buying a share or buying call? It's ridiculous. Let's see. Let me check it out. It's probably private. Oh, Apollo? Okay. Alright. Good luck. Solid long term? Okay, good luck. Are they the one that shorts GameStop? Is that why you're trying to add more to the fuel? Apollo. Yeah, solid return, right? Of course, long term. Alright, go ahead, buy into it. What's the return there? Oh wow, see, look, great return. So Apollo Global Management, obviously, that's the firm that kind of like got AMC out and got retail stores and all that stuff. I'm sure they have other stuff that they are. So it's fitting to me that you're buying into that. But now they are promoting it on Russell Brand, right? So more and more people are gonna want to jump into this type of firm and look at the return right there. Why in 2022 it's going down so much? $3 billion right there. So help explain to me why that is. And in 2020, right there, it's kind of like flat. 2021, 1.8 billion, and now they lose this much. Solid investment? I don't know. What's going on there? Why are you buying into this? Why are you promoting it right now? What is okay, so revenue comes up 200. Okay, is that why? Because the revenue went up? Well, this is like a financial instrument here, so I don't know how to analyze it myself here. I'm just looking at, okay, shareholder equity, comprehensive. Right now, they only make $500 million so far, right? So, okay, goodwill, net cash. What's the cash flow there? What's the net income? Is this 2012? Okay. Yeah, it's pretty lucrative, right? Because again, they fixed the game already. So just like how he was saying, 50 years of 20% return year over year, like that's ridiculous, right? Nobody could achieve that unless they know how to fix the game. So that's the whole point. That's the whole point of connect the dot and all that stuff. And Winthrop, if you buying into that, congratulations. Price action, they could close in price action. Okay, that's fine. So why is there still 22% short? If that's the case, I mean, where is the volume that they are closing pre and after market? I mean, there are hardly any shares whatsoever. So even if they want to close pre-market, how are they going to do that? Just my thought here. So if you think that they're not, why are you here trying to convince me otherwise? You see what I mean? I don't know, dude. Like, since 2022, it's just what I'm doing right. Okay. Oh, anyway, I don't know. I don't know what your purpose is to come to this chat here. I only have a couple of subscribers, right? You know that, right? Like, it's weird. It's weird to me. 22% because Wall Street isn't what? Isn't a non-believer. Isn't a non-believer? Huh? I'm not quite sure I understand that statement right there. And why does short matters anyway to you? Like whether we have, whether there's short position or not? Why does it matter to you? right? How does the stock trade matter to you, especially in GameStop point of view anyway? If you look at the last year, you know, we've been kind of like staying flat. Yes, we lose like, there you go, 30%. If you think that is like, in 5 years, we're up, you know, 4 times its value before. In, you know, the entirety of this company, we're up 5 times its value there. So if you think it's undervalued or overvalued, like severely overvalued, okay, go ahead, short it. Like, buy puts on it, you know, and bet it. Go against it, you know, why? And also, too, the price has been down, right? And so you should be making money right now if you're shorting this. So why are you coming in here to try to mock people that makes you money if you're shorting this, right? Shouldn't you be happy? Shouldn't you be happy that people are dumb enough to buy into this company, right? So that's just my thought here, because there might be something here that you're missing. And so, you know, I think you're wrong about this company. Severely, like, really wrong. Okay, so Wall Street is a non-believer. Wall Street is a non-believer of Apple as well at one point in Apple history. Did you know that, right? Wall Street also is a non-believer on Amazon at one point in Amazon history, right? So what? Those sentiment could be changed in moment's notice. You know that. Wall Street is also non-believer of Tesla, right? And so what happened? Those companies reign supreme. Why? Because they keep delivering numbers, right? Quarters after quarters after quarters. They don't care about, you know, what the price action is doing, right? What makes you think that GME couldn't deliver that quarters after quarters, right? So my thought here, you know, is that Wall Street is not an arbiter of truth here. They've been wrong before. And so, yeah. But if you're looking for like a sharp movement of this stock, you might get it. You know, the SPY might come down, and there you go. That's your sharp movement of this stock. If you're trying to bankrupt this company, I highly doubt you can. You know, because you have better leadership now. So if you don't see that happening right in front of your eyes, that's on you. Winthrop, I am a real fan. Emmanuel, I don't know, you guys. Like, I don't know what history you guys have with Marantz here, but you know, you guys all know how I feel about Marantz, and you guys all know how Marantz feel about you guys. Of course, he doesn't trust all of you coming in here trying to. It's the same narrative, right? This is why it's so tiring for anyone who tried to present the truth about this company. You know, at the very least, you know, I'm not here to hype anything, right? Because I don't want that hype train either, right? Because like, my point of view is that, you know, when you have these extreme, the truth is somewhere in the middle, right? So this is the middle, right? If every single outlet media out there is trying to convince you to not buy into this company, while on the other side of things, people think that they're synthetics. People think that there are fake shares out there, shorting beyond belief. I don't know. I can't see that. All I could see is 22%, which is a very high, in my opinion, right? It's still high to be shorted this much. Apparently, Volkswagen was like 18% shorted you know. And so, yeah, those type of things is remain to be seen. How is it going to play out? I don't know. You know, all I know is that I like this company, and I like this stock. I like this leadership. So there you go. Nothing could deter me from investing in this company except Ryan Cohen himself, right? So again, if next quarter he posts $1 billion loss, or hundreds of $1 million loss, then okay, we might have that conversation then. But I highly doubt it's going to be posted at a loss, right? He has to be effing up immensely for him to do that. So in a month or so, you find out what this company is all about. And so, you know, hey, it's the nature of the market, right? You have people who are a believer, and you have non-believer. And just because Wall Street is a non-believer doesn't mean anything, right? It just means that they are, the consent is that GameStop is a shitty company for them, right? But we see it differently, right? And so there you go. I mean, it is what it is. You still think GME has negative beta? Negative beta. Well, that's an option-related questions. It says right here, still negative. There you go. It's not from me. It's from this data right here. So it's not an egregious amount of I guess 1-to-1 is like when the SPY goes up 1%, GME go down 1%, right? It's an inverse relationship here. So yeah, there's a negative beta right here. I don't know how they calculate that. I don't know how they come. Hi, Northstar, thank you for joining. Pack a lunch. For me, thank Northstar back again. Hi, Northstar, thank you. Is GME your only investment, Bmore? Currently, no. I have other investment. It's just that I have a high position in GameStop, in shares anyway. So I've been an investor for a long time. 2 years ago, no, not 2 years. Hold on, let me see. I marked it on the calendar before. Yes, my cost average is higher, but I'm adding more and more right now. I just got cleared, got a large sum of dry powder to add more into my position. And of course, like, really doesn't matter what my cost average is. It's no secret that my cost average is way up here, right? This is when I start my position. You could take a look at that. So I bought at 60, of course, little at a time, and then bought at this price range, 24%. It's like all of these purple. That's when I started my added more into that price point right there. And because of the nature of how I set my Roth, I couldn't do it like at what price. I have to buy in the morning or not, right? And so that's how it goes. I can't change that. It's just how the platform that I use to buy it, that's how they do it. I can't set a price, limit price, and do that. But then I have my other kind of short-term trading, midterm, and all that stuff that I kind of shave in and out of the position. Currently, I'm mostly GameStop right now on that trading portfolio, But I have my long-term. These are my long-term, in my Roth IRA. So just full disclosure, obviously my cost average is somewhere around 33 or so. So yeah. So I mean, to me, I think because I'm thinking about long-term investing on that front, I don't really care what price point, as long as I could accumulate as much as I can. My goal is to max my Roth IRA. However many, of course, like I skipped 2 years of maxing out on that front because I didn't have the funds to do it. But this year I'm kind of slowly building that portfolio back up. So I'm hoping to max last year before I file the tax, and then max this year as well. So 2023 and 2024 is going to be my max. I'm trying to save as much as I can for that. And so of course, like my goal is to accumulate more shares in GME and then putting in that, and again hold it for decades to come. Yes, it's a gamble, obviously. To me, I'm just sold on the company. At the moment, it's my high conviction play on that front. And of course, like I have 30 years to play this out in front of me. And of course, like Brian Cohen is in here too. So it's why not, right? People believe in Elon Musk, become millionaires because they believe in Elon Musk, and just stash high conviction play for them was Tesla, right? I'm sure people who believe in Jeff Bezos 10 years ago immensely profited from that. I've heard about a guy who, had a seed money with Amazon for $250,000, and that $250,000 turned into $1 billion at some point. And of course he sold it. I think Nick Hauer or something like that, some billionaire. So yeah, I'm trying to replicate that, and of course, like I like the storyline of Ryan Cohen, and that's why I'm investing here. That's why I'm talking about it, and of course, the fact that you get to get into an industry of kind of, I don't know if it's cutting edge yet, but I think the innovation is here for this company. And I think the vision is not clear by the people that are speculating, right? But I think to Ryan Cohen, he has a plan. It's just, again, he's not going to tell you. It's like if you pull your hair because he doesn't talk to you, then that's on you. Because, you could call it a blind faith. All right, that's fine. But I think he has a track record that I like about his ethical, about his work ethic, his demeanor, his the way that he wrote an article. It wasn't like gloating. It's like, hey, I'm a billionaire or whatever. I get to start this company. It's always come in a standpoint of appreciative of people that gives him the opportunity to make something big for themselves, right? I hope that makes sense. Like, I know. I'm a fangirl or whatever of Ryan Cohen here, but I see a good person in Ryan Cohen, right? Now, if a good person doesn't want a great businessman, I don't know. Winthrop, you might have a different character that you love so much in the financial world. Who do you look up to, Winthrop? I'm just curious about your psyche in investing here. You just told me you invest in Apollo Global Management. Okay, that telling a little bit, right? Because that's the type of leadership you want to look up to, right? That kind of like work underneath the table, right? Okay, that's the character you want to associate yourself with. All right, that's on you, right? To me, GameStop is have a good character in there. So, again, hey, this is my own assessment here, from what I could hear, see, and could gather my own information here. You miss $11. Shame. Why would I miss $11? What made you think I miss $11? Brian Cohen action shows he had not such plan. Okay, that's on you. You keep saying that. Really? Okay. Ken Griffin? Okay. Leon Black? All right. Those are the characters you look up to. All right. Well, hey, that's on you. Congratulations. Those are good people that you're associating yourself with there. course, I'm just condescending. Sorry. I didn't miss anything. What do you mean, like $11? GameStop never hit $11. It's like 12, right? I missed this one because my fund didn't clear. I couldn't. I didn't have access to the funds that I had coming in. So, yeah, that's fine. I mean, what's the difference between $12 here to $14 if I'm holding it for 10 years at a time, 20 years from now or 30 years from now. Inflation alone, you think it's gonna, you could buy GameStop at $14 in 20 years? I highly doubt it, right? And if in 20 years Ryan Cohen couldn't prove himself, then I'll make an assessment, reassess the situation. But yeah, I'm willing to give him, like I said, I'm investing for 10 years at a time, and then I'll reevaluate my position when Ryan Cohen doesn't deliver. Currently, you think he doesn't deliver. I think he's doing a pretty good job here, at turning this company around. Right, come on, And it's a shame that you don't see that. Or you're seeing it, you just in disbelief at the moment. So that's could be possible too. King Griffin is a stand-up guy. Okay. I disagree. Just the way that he's talking about the world in general. He's thinking that he's the smartest guy on the planet. And the fact that he thinks that he could set the price of the security with a straight face, that should be illegal, no? It's like, how could any institution set a price of security? I thought it's a free market. It's like, really? And that's an upstanding guy that you're talking about? Trying to fix the market in order to keep himself rich, rather than having the market just do its thing. And if he's actually a smart person, why not take advantage of the fact that you're smarter than the people, right? Don't fix the game, right? Just be better than people who are better than you, right? And so currently he's playing, there's, I don't know if you are aware of this, okay? He has a firm that is a market maker, and also another firm that he owns that is propriety traders, right? Meaning that he could technically trade based on the order that comes in. So front runners, right? They call front running the order. And so if anything like that happened, right? And of course, like they would love you to believe, oh, these two firms are not related to each other. Come on, like, are you 5? Like, you think there's no conflict of interest in that? It's like, we're not living in a fairy tale here, right? In a perfect world, of course, these two firms don't communicate. But we don't live in a perfect firm. And also too, his firm, I don't know if you're aware of this, the SEC found him mismarking order. Okay? And it's well known. Go look it up yourself. Maybe you open your eye a little bit there. And so if you have people like that you're looking up to, that are fixing the game in order to win, that's called cheating, no? Like if I get a cheat in my whole life, right, I'm a loser, right? And so that's just my thought, right? I want to beat people fair and square, right? Based on my own ability, based on my own knowledge of things, not fix the game in order to stay up top, right? If you lose, accept your loss. Why not, right? It's better of a man than somebody who just, oh, I didn't lose, this happened. It's dumb, right? It's like BS. Just my thought. Hey, I don't know Ken Griffin personally. Just the action that he's been involved in, those, at least an appearance of conflict of interest is enough for me to speculate that he's doing something non-kosher, right? Doing something illegal. But even the proven point of mismarking order in order to, stay ahead of the market. It's piss poor performance, right? Yes, you could make tons of money on that, but you're stealing, essentially. You're stealing from retail investor. You're stealing from institution that is placing that order as well, right? And so, again, stealing from other people based on front running because you have the ability to see all the orders that comes in to your firm. That's not fair. Any idiot would be able to make that money. It's like even idiot like me could have made that tons of billions of dollars of, coming in. So again, like that's not, the character, like a living legend, really. Yeah. It's relative. Of course, like if I have the same connection, Winthrop, as Ken Griffin, I probably make the same, right? Would be able to offer the same services that he has. So the reason why he is able to do that is because he have connection, right? And to say that, he provide this service to people that couldn't, it's like, it's BS. Come on. The reason why he want to do that is because he want to make more money for himself. Okay, has nothing to do with being a philanthropist. So to try to help people here. It's like, are you five? Are you living under a fantasy world here? But anyway, before I can you look up what we talked about earlier today? The grading system in ranking status. I don't know. Grading system. Oh, you mean like what by industry? I don't know that grading system, Lionel. So if you look at what is wait, hold on. So consumer spending, discretionary, overall, industry, I think it's specialty retailer. I think that's what you mean by that, right? So Gamestop is at number 17, if that's what you want to know. So as far as like A or B or C, I don't know. I don't know what ranking you're talking about there. But yeah, so as far as like the top retail stores that is classified as a specialty retail, that GameStop is in the whole country, right? The number one is O'Reilly Automotive. There you go. And Five Guys, that's like hamburger joint, right? So the only thing that is kind of close to GameStop is Best Buy right there because it's electronic. And so technically we're trying to beat Best Buy here in the same retail. But these are also specialty retail. Yeah, and Moran's talked about these two already. Private equity, right? It takes 3 years for Rancon to enact BC's plan for downsizing. What are you talking about? Like, you are from an alternate universe here, Winthrop. What the heck? Ridiculous. Such a visionary. How do you know that the BCG is the one that is trying to downsizing GameStop here? It's like, it makes no sense, dude. It's like, I don't know. Again, like, you might have a different set of facts than the rest of us in the universe here. Hi, Morantz, thank you. Winthrop, are you clueless or are you on the wrong side of history? Yes, oh my god, Rico is a supreme and whatever. Better looking, add a bigger follower. Stop hiding, come on to the show with your face and words, and the floor is yours. Yes, I agree with that. So Morantz, I don't know, I tag you in here because I watched this interview. I don't know if you've seen my reaction to this one. It's very canning on what Tony Robbins is talking about, and everything that you're saying is right, like, with the connect the dots and all that stuff. I hope that you could kind of like take a look at this yourself as well, and what he's saying about private equity and how they're able to kind of like return 20% every decades, right, like for 50 years, and it's never fail. And he's promoting it to retail investor to try to get more people to be excited about this type of investment, right? And my angle is that why now, right? And my thought is that they might want to promote this because in this segment, in this particular interview, he was telling people, saying, my hope is to try to get people to put this type of instrument into every single people's 401k, right? And my thought is that I think that they're trying to kind of offload, the short position of GameStop to the public, right? And this is why now Tony Robbins is promoting private equity angles. Like, hey, you could, there's an alternate investment vehicle here that most people don't know about, and now it's ready to, democratized to the public. And so it's a good 20 minutes of eye-opening too. And I think I saw some correlation in how he was describing the 2% and 20%, the 2% fee and the 20% on the upside of things, right? And yeah, you're spot on that. So it might provide you some more insight into, all of that. So it's just very interesting to me. So I'm glad that you're on here. Moran's use the same line over and over again. Likewise, hence why your channel isn't growing. You're so one job. You're again alternate universe over here. Is growing. Moran's has been like, and even if he's still at what 200 subscriber, the truth is there. The guy has been telling the truth. So, at least give the guy some respect here. While you just spewing lies, it seems like, right? Again, what is this BCG bullcrap right here? You think BCG is the one that come up with this plan? It's like, crazy. And it's fitting to me that's why you gravitate towards the Ken Griffin of the world, right? Leon Black of the world. It's like, okay, if those are the people that you're looked up to, oof, you're in a world of hurts. And you're one of them. 9,000 and you get 1,000 views in your bots? That's ridiculous. Watch the earning 100. Okay, so 4 times a year congratulations. Winter, come on, like, why are you attacking the legitimacy of Moran's channel? Like, what does that serve you, right? So what if 2 people get to see it? It's still the truth, right? The truth reigns supreme, okay? Thanks. Now let's see what you can do. I know, but honestly, I think this live stream, I was live this morning earlier too, but this one is just like, I just saw this segment and I was just like, look, there's so many kind of moving parts over here that I'm thinking that they're ready to, I don't know, offload their back onto the public and at some point, at some form, right? Because we've seen them pumping the market. We've seen them kind of, try everything that they can to try to get the meme stock, right? The meme stock angle of things. To me, everything hasn't worked to try to drive the public away from this company, because they know this company is unbeatable, right? In a sense, like, they try to drive the price down as low as they can, convincing people, to sell the company. And so since they can't do that anymore, now they're ready to kind of load it off to the public. Yeah, I mean, these two are massive celebrity here. And so I don't know if Russell Brand know about the private equity angle. I wanted to kind of comment on this particular video so that I'm going to throw your name out there. So to see if, Russell Brand would contact you. So if Russell Brand were to contact you, so do that. That would be amazing to see you on Russell Brand, to tell your knowledge about private equity on that angle. But I don't know the fact that he's promoting this now with Tony Robbins. I don't know how well versed he is on the angle of things, right? Of course, I'm not saying that all private equity are like Apollo Global Management here, or any of the private equity that you mentioned on your Connect the Dot, Marantz. But the fact that he was saying about the fee structure, that kind of triggered me. The 2% and then the 20% upside. So those are the ones that are vulture, right, in my opinion. And so he's ready to offload it, democratize it to the public. So I don't know, Marantz. So that's all I have for this one, though. But I appreciate all of you joining in. So it looks like, yeah. Okay, hold on 1 second.
Masterminds in, it's already sort of commonly understood that if you were to just invest in what Nancy Pelosi invests in, you would be beating some of the world's best hedge funds. But you're saying that now, through democratizing these techniques, we don't have to simply make Nancy Pelosi our spirit guide. We can ourselves invest in a way that will provide us with a great return. One of my questions, Tony, is if you are democratizing these principles and making them accessible to a wide number of people, won't that in itself influence financial outcomes and diversify the number of people and somehow dilute the impact? Or is that a rookie error I'm making?
No, it's not a rookie error. It's a good question. No, it's really, first of all, Trudeau did the same thing, by the way. He made those investments right before he enforced those actions. It's just unbelievable when you look around the world how lucky people are.
Very lucky.
Very lucky. But no, the reason is, it's interesting. Part of what the challenge is and why things get overvalued is because for years we've had these artificially low interest rates. And so the only place to put your money was in the stock market, which is risky. But so more and more money chasing the same small number of stocks. So think that's what inflation is. And so we used to have 8,000 stocks, for example.
That's not what inflation is. What the hell? That's just too simplistic of what inflation is.
Here in New York, now you got 3,700. And the same number of people going after them and saying, oh, there's no other place to go. Well, now bonds are giving a decent return, so some more money's going there. But to give you perspective, think 3,700 options versus in the U.S., there's 250,000 companies that are over 100 million to 3 billion. 87% of all companies are not public. So what private equity does is they know a category. Like, I'll give you an example. His name, a gentleman named Robert Smith of Vista. He starts with nothing. He's an incredible human being. He's rated one of the top 50 business.
Now, that name, I don't know if Marantz... Does that ring a bell to you? It might be one of the guys.
Minds of the century. Started with nothing, built this $100 billion fund, and I can't tell you the exact number because you have to have his perspectives, but let me just make it clear. It's way more than 20% compounded a year for 26 straight years. So give you a sense, if 5% is going to give you 14 years to double, or 9% is going to take 8 years to double, when you get 20%, it only takes you 3.5 years to double your money. you can really grow something with a very small amount of money with compounding in that area. Now, this guy, he's taken one category, software as a service. And so he knows everything about those kinds of companies. He's been doing it for 26 years. He can take a company, figure out how they should change the company. Do they need new leadership? What kind of technology will do it? How can they cut the costs? He builds the company up and then he sells it to a larger company or takes it public. That's the format. So there's so much more in private equity. It's not going to be diluted. And that's the beauty right now. My hope is it'll get into people's 401ks. It'll be available where people can accelerate their returns, because that's what pension funds and the wealthiest people in the world have done. When people look at where they put their money, the ultra wealthy, on average, the latest report shows they have 46% of their money in private alternatives, in private equity, private credit, and only 29% in the public stock markets. And across the world, for 35 years, every stock market in the world has been less than private equity in that same country, to give you perspective. So this is what the rich have had access to. And now people can not only get into those funds, because it's
So they've been having access to this for decades on end. Why now? Why now privatize it or democratize it to the public, right? And maybe, again, that's why I have my own thesis here, is that they're trying to offload the risk of Gamestop, maybe. I don't know. Again, hey, a girl could speculate, right? Would be my speculation here. I have no proof. But I think the timing of this is curious to me.
one thing to legally get in, but to now be a partner side by side with them is one of the most exciting things that I've seen. And it's not only just private equity, it's also private credit. I was just reading an article today that just came out in the Wall Street Journal, was talking about private credit as the new explosion. I'm sure you know banks since 2008 have gotten tighter and tighter. And now, some of the regional banks here in the United States, I'm sure you heard about Silicon Valley and so forth, that have had their problems. Well, now banks, all these companies, these 250,000 companies I told you about that are 100 million to 3 billion plus, they have a hard time getting financing. And so what's happened now is the private equity guys have huge sums of money. They know how to value companies properly, and they loan money to these people, and they do it really judiciously. They have less than a 1% failure rate. So let me give you an example.
That's important. 1% failure rate, right? Well, because they fixed the game already, right? We all know what happened when this private equity, some large sum of money that they have for any company at all, they got it from within. We know this. But of course, the audience of Russell Brand might not.
Example that maybe your audience can understand. If you invested in bonds, a bond is just an agreement. It's an IOU. I'm giving your money. You're promising to give me my money back plus 5%, 4%, 3%, whatever it is, right? Well, bonds have such low returns that 2 years ago, people were buying junk bonds. They call them high yield bonds, super risky bonds, to simply get a 3.9% return. Well, we were getting 9% in private credit at that time. So private credit, these people have less than a 1% failure rate. Any bank would die for that. And they're producing returns right now of 11 and 12%. If you have a mortgage and it was locked at 3%, you're happy right now. But, with interest rates rising, if you didn't lock it down, you're paying 2.5 or 3 times more money for the same house. Well, that's called a floating rate. Well, the floating rates on on private equity loans or private credit loans, they float. So things that were 5 or 6% are now 10 and 12%, and there's no more risk than there was before. And those are the types of returns people typically get from equity, from investing in the stock market if it goes well. So there's some really interesting opportunities happening. Then there's opportunities to actually, believe it or not, to own sports teams, which no one but multi-billionaires could do before.
Sport team. Anyway, I'll link this video down below. So I gotta go. I only planned to be here for a couple hours here. Yeah, it's an hour. So yeah, I thought I hope you learned something, and thank you all of you for joining Moran's as well. So I hope you take a look at that video and then do your live stream with it. And yeah, alright, I'll see you.